friends, now the last thing in input tax credit is the concept of matching. Section 41, this simply says the recipient is allowed input tax credit for all eligible inward supplies claimed by him on provisional basis. So a recipient says that I have received these supplies number 1, 2, 3, 4, 5, 6, 7, whatever he says, subject to his entitlement to avail the credit is given to him on provisional basis. And this credit can be used to pay self-assessed tax on outward supplies. Okay, so whatever he claims that whatever he has received, for that he is entitled to get the credit, but initially that is on provisional basis. Why provisional? For that answer lies in section 42 and 43, and here in this video I'll just give you an introduction about what is in 42 and 43. The details we'll discuss in the chapter when we come to returns, right? Then comes the concept of matching. This is in section 42 and 43. Right, this is only for basic understanding for the purpose of input tax credit. The concept of matching. For this we have to understand that there is a supplier and there is a recipient, right? Now whatever supplies are made by him, for him those are outward supplies, and these supplies are received by a recipient. For him the same thing is called as inward supplies. Okay, now both of them are required to file returns. Supplier has to file return for the output, and in recipient has to file the return for inward supplies. So effectively the supplier has to file both the returns for inward supplies, for outward supplies. Recipient is also required to file both the returns for inward supply and output supply. Now assuming that this person says I have made supply number 1, 2, 3, 4, 5, 6, 7 and so on, and out of this the supply number 2 and 3, this has been given to recipient number 1, this is given to recipient number 1, this is given to recipient number 1, right? Now this person is also filing a return for his inward supplies. This says I have received supply number 1, supply number 2, supply number 3, supply 4, supply 5, supply 6, supply 7 and so on, right? Now these are not the same, because these are the supplies which are made by the supplier, and all the supplies which are made by him, those are listed here, and these are all the inward supplies. So these are not same, right? He has received from multiple people and he has supplied to number of people. Now this is supply number 2, supply number 4, supply number 6, those are made to recipient number 1. Now recipient number 1 says, this recipient says that this is supply number 2, this is supply number 6, and then nothing more is given, right? What happens? This supplier is saying I have made 3 supplies, but this person is saying I am received 2 supplies. Not a problem at all, because he will pay higher taxes, he will get lesser credit. Not a problem at all. But what happens other way around, that if he says I have received supply number 6 also, plus I have received supply number 7 also, which is not declared by the supplier. In this case, mainly the concept of section 41, that is saying provisionally it is allowed, right? Now this person is having an opportunity of making the changes in the return until the filing of the return for the month of September in the next calendar year or in the next financial year. So at any point of time up to that it is allowed, then this is valid, otherwise it is not valid. So this is called a mismatch. So mismatch is informed to both the parties, and if this person says that I have received the supply, this person does not accept, then initially credit has been allowed to him, but later on it will be recovered by adding in the output liability along with interest, because here the credit has been given for which the tax has not been paid by this person, right? So this concept is matching. So whatever supplies are made by the output supplier, that is required to be matched with the information given by the recipient in his input supplies. And if both the things matches, credit given provisionally, that becomes final. And if it does not match, then ultimately the credit given provisionally has to be recovered by way of adding in the output liability of the recipient, and that recovery will be along with interest. So this is just a brief introduction about section 42 and 43. This is not everything. So section 41 simply said whatever the recipient is claiming, that provisionally credit is given to him, but later on the concept of matching will come when the returns are filed by the output supplier and by the recipient. These both should match, and if these do not match, the credit given provisionally under section 41, that will be recovered along with interest, right? So these 2 sections we will discuss in detail when we come to the topic of returns, and with this we come to the end of the entire topic of ITC.